Well, great to be back with you, everybody. Happy Friday. My name is Mike Fairborn, Senior Manager at Charles Schwab here. And today, folks, I did want to focus in on, as we talked a lot about sectors and industries as of late, but really using some of the tools on the platform to help us devise a simple way to really find out those stocks that are breaking out in those specific sectors and industries. So truly a top-down approach, market, industry, or excuse me, market, sector, industry, and finally stocks, but seeing the breakouts on the charts. So I want to tap in to that today, and we'll go from there. But it should be interesting and informative. You'll be able to, each of you, build that today by the time we're done. So you have access to that and be able to utilize that for breakouts over different time frames just very quickly. So we'll dive into that in just a second here. But it is a happy Friday. Hello to you. Uh, oh, thank you, Jenny. That is very nice of you to state that. Appreciate that so much, Jenny Michelle. Good to have you on board, and that's good. Yeah, yeah. We talked about she's referring to the awesome oscillator, which we did go into yesterday in our class for ThinkScript. We devised one of the ways to that is utilized by that. Bill Williams came up with that in 1998. Just as a side note, and it's kind of an interesting one. But that's interesting to hear. Appreciate the feedback there. Hello to you, JV Texan. Obviously, an individual from Texas there. All right, good to have you on board. Jay Richardson, welcome. Michael, great to have you here. We've got Jody, good day to you, as well as Virgil, and many others. Hello to you, Will. We've got others in here. Awesome. Well, folks, we're going to finish out the remainder. This is the last class of the week. We try to condense a lot of what's happened during the weekend of this class, but I really did want to focus in and leave you guys with something that you can utilize over the weekend in terms of specific price breakouts over price ranges. It's a great tool using an indicator we haven't gone into, but I think it's just so helpful for sectors specifically. And I've utilized that in the past for sectors. We're going to run it against sectors. Then we're going to take a look at the stocks within there that are also breaking out too. So very good. Hey, we're also joined in the chat by a good friend and colleague of mine, Mr. Cameron May. Good to have Cam on board here with us. You see him in the chat as CM. Folks, you can follow us both on X. Cameron May. Encourage you to follow Cameron. Cameron May CS. Mike Fairborn CS. And let's get started here. All right. Been great to have all of you coming in and just running right now. But yeah, any questions, comments, throw them in the chat. We can address those for you. But in terms of our disclosures, this material is intended for general information purposes only. Now, investing involves risk, including the loss of principal, and for some products and strategies, more than the loss of your initial investment. Now, there is a note there on futures because we do look at futures in this class. And we just look at the charts, though. So just want to state, futures and futures options trading does involve substantial risk, not super for all investors. Finally, a look at our last slide right there. Okay, and if you are new, just to let you know, like I mentioned, last class of the week, we just wrap up some of the news events during the week, and we just go from there. Um, we take it from there and we build up and we just kind of take a look and see what has been moving and what's happened during the week and any sort of additional indications. So what I'm going to do is actually start off with the S&P 500 index. Many of you already know what's going on here with the S&P 500 index, and it's been playing its own little game despite all of the different price patterns and lines that we've drawn on the chart. It's really had its own way. I mean, it's really kind of marching to the tune of its own, uh, compared to what it could be doing. Over here, I mean, we had eyes on this right there, right in this range, and we were just saying, you know what? We came right to the apex of that triangle line, and what did we see? Well, we saw a fake out. Then we're seeing a potential breakout. Now, I mentioned over here the summer rally can extend mid-August to late August. It has. I mean, obviously the market can extend as far as it wants. Believe it or not, it can do whatever it wants. It can also drop too. So we got to throw that into the mix, but we'll see if it follows through there. I did want to state, and you guys can see this. I don't know if you've done this yet, but I did put this line over here. That's an alert. Alerts are interesting because they can notify us if we do break above a range. We had been going sideways so much through this channel. I just said, you know what? I've seen enough of these trend line breaks. I want to actually see a breakout above this range. And that's what we're talking about here, folks. It's right at an interesting number, 7,600. Okay. A quick note, though, I just need to note this for those alerts because Alerts are interesting. They are in fact not guaranteed to be delivered or delivered at a specific speed or time frame, and not active and not to be used as a replacement for managing the position. But have I had any problems with alerts during market hours? I've had no issues during market hours. I've seen them be alerted, but we just state that, in case it's a crazy market, they're just not guaranteed. But I've been using them for years, and yeah, text message is my common approach. Many of you, though, do use email. But anyhow, I just want to state that because I just think it's a great capability of the platform to be able to text you if something crosses along a range. It's been there for a while. I mean, this has been here since, that's right, June, folks, right there. June, 1st of June. I mean, we've been in that range. And so we're basically still there. Coming in through August, nice to know when you break out above those levels. Now, I want to do this. I want to sidetrack real quick. We're going to get into our breakouts pretty quick here, but not without a little bit of a market review. Now, I come over here and I show you this, and we are using the ES specifically. That's the S&P E-mini. Okay, E-mini S&P 500 index futures. It's the futures contract. I don't need that line there. Let's kill that. But you can see very, very similar. It still is above tracks the 500 right over here, right? Those stocks right there. So it will track those just the same way. I mean, it's the futures across the same 500. But point here is I'm watching this line over here. And if we're starting to get moving on it, not really too much just yet. Now, Thursday and Friday can be kind of light volume, but the one thing I did want to highlight here, which is interesting, is we saw some really interesting strength coming through here on this level. Clearly, we broke higher. It was a moderate break over here, but we had a lot of volume coming in. Now, folks, we haven't lost very much of that. In fact, kind of a sideways move. This means that they're probably according to money flow, I got to say that there could be a lot of positions still holding on this. Now, we lost a few folks, and obviously, and I understand that, on a move like that, because that's a big downward move right there on that candle. It's huge. It's a big one, but we'll see what we get in sort of a change here if we can kind of rotate out of this. Now, back to the SPX, because I want to go into using now my 10, my daily, my 30, and my 5. I'm going to drop it down one time frame to the 30-minute and just show you what this looks like over here. You can see over here, this is what we're up against to get higher. A lot of times we zoom into that time frame to give us a little bit more insight as to what's going on behind the scenes. And yeah, you can see it. In fact, it's big enough. I can actually even write it in there. It's a gap. Now, when you get a gap in here, that's 7,500. Expect resistance in that range, and it can be sort of tough sledding to get up through there. One of the key points that we just have to stay, and I would actually guarantee this. I can't guarantee hardly anything in the market, but I can guarantee you this. We have to get we have to get above this level right there. That's a big one before we get above this level. Price, just by what it has to do, we got to get above here first. 75.25. And so I think that gap in this level is very, very interesting. One thing we've had a really challenging time doing in this entire stretch of a triangle. Remember, this is a 30-minute chart, and that's the apex right there. If you want to see what that apex looks like zoomed in, there you go at 74. It's fascinating what happens around there. But this we have not seen yet. We have not yet really broken above the shorter term high, prior major high range, which is right there. Uh, we're going to have to do this. That's what I was guaranteeing. You got to take this level out before you hit that level, just by the law of the price, right? You just got to go up. Now, this could be interesting and it could give more signs of a break higher, but you're going to want to keep eyes on that right there. Okay. So I'm just going to do this right now, and I'm just going to quickly, since I have access to the 30-minute, which I do like you guys to look at, just so you can really kind of break down what's happening. Right click, create alert. We'll go through the process. At or above that level that I pointed to here on the S&P 500, I'm just going to say short term high break, break. Okay. And that's going to be the message sent via my text message. Make sure you select this down here under notify with push, send push notifications to the mobile device. That way you get those sent. But to set that up just generally, go to setup, application settings. It's right there under the notifications tab. You've got to click on that. You can set up email or a text message, or or the computer can just make a sound, and mine does that too. But if I'm away from it, I'd like to be notified. All right. So that was kind of a lot of information, but by zooming into the 30-minute, what did that just do for us? It helped us in terms of managing, getting a sense of markets and sectors. The 30-minute helped us because now we can say, that's a big one. That means we're closing that gap and we're breaking above the prior high, something we've really, really struggled with in this long daily. And this goes back further, but this long daily triangle pattern. Okay. Back to our daily, just with one click there, just flipping that back and forth. A great way to do it if you're utilizing those grid charts. Okay. Now, NDX, it's heavy, heavy, heavy technology, 68% technology. What are we seeing on it? Well, there you go. There's the 38.2 bounce. We're well below the triangle here. But the one thing we're not, if we just cancel out this triangle right now, this was the lower end of the triangle, right about there. You can see where I've drawn that line in. That's the lower end of the triangle. Upper end is higher, but now we've got to do this because, if we broke this low, this is what I'd be more inclined to look for. I would say not really triangle here. I'm going to keep the lines on just because I want to watch and see if there's anything that happens around the apex, around that 20, that 30,000 number. But this is actually, I've got to zoom this down. This is more likely something like this. I mean, a lot of traders would say this because we broke down, we kind of violated the upward move of the triangle. But if you just go like this, oops, sorry, let me just get that going better. Okay, so if I go like this high to low to high, now I'm going to measure just approximately. That's your triangle in an in a bubble type scenario. I've watched a few of these. I know Cam has been through one with me with the dot-com bubble. That was a huge one, right? We've got AI, which is sort of a corollary to it. It's similar to it, the AI build out, just like we had this move, although it might not seem obvious right now. But just as we had this move that was so powerful after what? After this, and let me get this a little bit thicker here so we can see this. But after this right here, this pullback, notice what we got? Another pullback. We kind of lose sight of this sometimes because it's been a while. It's taken a while for this to unfold. This was a long-term consolidation. I mean, it really was. I mean, if you look at it, that was October. That was before Halloween of 2025. And we went all the way down to April of this year. And then what did we see? Bam. Okay, a big move. Well, this is a consolidation, and we're getting close to these prior highs, almost like resting on a prior high. Got close to the 50% fib right there. Okay. Something like that is when you're talking bubbles is not out of the ordinary at all. What we're going to be able to do though in this class, the swing trade class, and other classes that we do teach here, we're going to be able to look and see specifically, are we breaking? Oh my gosh, look at that. So that is an alert on our Mag 7. I'll pull it up and just show you guys that. That's where I was heading next. We just got an alert on it. But if we start to see some higher highs, higher lows through here, but with a lot of strength like this, it could be very, very interesting, to check out. Now, a quick note, because Jenny did bring this up earlier. It's an interesting one. I just want to make sure you guys know about that class on the Awesome Oscillator. It's a very, very interesting one. But what it looks for is that initial wave right there. And it can give you some insights when that momentum is actually shifting. It tells you, it gives you, according to the indicator, it says, yes, we're seeing that sign that it could follow through, or no, we are not. I'm going to do this just so you have it. This is the link to that class. And I only bring it up because we might be getting right there. By the way, that's why, I went through the process of building out that scan where I explain it, but it's in there if you want it. If not, don't worry about this right here. Okay, just ignore this, and some of you already have it. This is awesome oscillator. God, I didn't spell that right, but I don't mind. I just gotta, okay, fine. I just want to make sure you have that because if we do turn, it's not just the NASDAQ that's turning. It's everything, a lot of what's in the NASDAQ that's turning. S&P 500 as well. So there it is if you want to check it out over the weekend or whatever. You don't have to, but I'm just saying it does help with the bounces like right there. It'll give you some insight like it showed over here on this one too when we had it up. Okay. So, all right, folks, let's go right into our Mag 7. That's important because that's part of that. Remember, that can be up to 47. Well, it was up to 47% of this, of the bull runs. I mean, accounting for 47% of 500 companies. Incredible number. That's a very, very low percentage of stocks. 7 divided by 500. Yeah. 1.4% of the stocks in the S&P are accounting for 47% of the move. Now that number can change, but that has been stated as that as of fairly recently that I saw that. We just saw the Mag 7 when you add them all together in that symbol box, just use that plus sign, plus sign, plus sign. What I was looking for as an initial move, which just ties into everything we're talking about, is can we start to break above this very, very heavy level of resistance on the Mag 7. Now, one of these companies is not helping us today. That would be our first one, Apple. There's a lot of big winners and a lot of big losers. Amazon was a good, a big one to the upside. But folks, we got above this collectively. All of these companies combined is what we're seeing here on this chart. And if I just go right here, and I promise we'll move ahead, do you see it now? Do you see that rounded formation here? We focus in on this and we put an alert on here because anytime we're talking about roughly, you know, half of the S&P 500, if this starts to go, now we might have a driver, a catalyst to get that really moving. And that can just be some good insight. The wild card here, though, is Apple. Let me just show you how we put that on. I tried it yesterday and it didn't work, but let's just say I want to know when it closes this gap. I'm going to right click here, go down to create alert, and let's just see if it lets me do it this time. Or did they stop it? I just said higher. See, it let me do it one time and then somebody went, they didn't like what I was doing behind the scenes and they fixed it. You guys saw the alert though, right? Crazy. Look at that. There is my actual alert. I did get an alert, but I can't do it anymore. They won't let me do them on when you add them all up. Maybe it just weighs down the system or something. It has to check it all day long. That could be it. But anyways, what we can do is just do the same thing on the NASDAQ, the NDX, if it's breaking higher. But a very interesting one to keep an eye on. Quick note, there is the one that's down. The rest are all solidly in the green. Look at Apple. We were making such good progress too, but it did knock us out of our swing trade, unfortunately. Yep, but that's how it goes if you hold through earnings on tech stocks sometimes. But we'd mentioned a little bit about earnings, but yeah, that's a big mover. Amazon though, kind of coming up, yeah, substantially higher. That's what's helping the group. But collectively, just stepping back, you can just see the extent of how much the Mag 7 really, just by the size of the blocks, moves the weightedness of it moves the S&P 500. And you got to say Google, Alphabet with Class A, what is it? Class A and Class C shares. That collectively is the biggest block out there. There's your Amazon over here too. Tesla's in there. A lot of people like to add in AVGO as well, but it's not officially in the Mag 7. So it's been the Lag 7 for a bit. People like to say Will it get out of its lag range? Triangles is a lag pattern, but yeah. Anyways, so we've got that quick note. Let's hit sectors before we look at actual breakouts, and we're going to create a breakout strategy for you guys to take a look at, use over the weekend and going forward too. But sector grid 6 month. Let's just see. Let's go full screen here and see what we've got. Yeah, I mean, look at technology though. So when we're just looking at the stocks exclusively in the S&P 500, we can see right there, folks, that is like a bull flag. Just the stocks themselves that make up that sector. Right here, we're looking at 11 of the sectors, all of them, relative to the S&P down there. And you can see my two alerts now that we've got. But this is interesting too. That's a bull flag. That you have to say is the most similar pattern to the S&P 500. So again, that could really rally over here. It's been consolidating for a little bit of time now. The high there was June 1st. So eyes on this one. What else do we have moving? Healthcare. That broke out, kind of doing an Elliott wave, ABC right here. Oh, not that, but ABC. Not an elongated C, but just a regular C wave right there. And that too could be of interest. Just in terms of just, from technicians looking at strength. Another one though, or two more. Let's just hit two more. The rest are really, I mean, not to say that materials can't be strong. Gold's been down for a while. Industrials, God, staples. Look at that. Sideways, sideways. Now, if they start to break above a long-term range, that could be interesting. Even utilities down here, really sideways. Communication services, not as strong as technology, but the key ones, just two more that are kind of interesting here. Energy, kind of a cup and handle here. Now remember, this is a collection of all the stocks in there, so park that in the back of your mind. I don't, but the problem here with energy is it's very, very volatile right now. Considering all things in the market, it's very volatile. We don't know what's going to happen from one day to the next in terms of the Straits of Hormuz, the Red Sea, negotiations. It's on again, off again. That one you just have to say is quite risky. But financials also moving up. So really you have, you've got this one. There's quite a bit of risk. Two over here. I'm just looking at strength. Three and then four. That's not in any particular order, but those are the ones showing some strength as well. By the way, real estate down there too. As you can see down towards the end, it broke out, kind of consolidating now. Real estate interesting as well. Now, I don't have a real estate. I'm sorry, real quick. Investing in REITs may pose additional risks, such as real estate industry risk, interest rate risk, and liquidity risk. Had to throw that in. Okay, but that's what we've got. Now, what we might want to be seeing is there are going to be leaders in this pack of companies. I'm going to choose the strongest one, I think, here. Healthcare is really quite strong too. As of late, healthcare is actually stronger. Let's look at those two. But folks, I want you to run this scan across everything later today. Maximize the sell. Now, if I were to go over here, maybe an interesting range right there, create an alert, breakout, question mark, something that we could be watching. Notice though, we can't do it on our own indicators, but we can do it on technology stocks or any of the sectors that we can put alerts on. Why is this interesting? Because breaking above here might be one of the initial signs of going higher. Of course, you might want to look at something like the Awesome Oscillator to give you some signs on that. Also, within some of the think scripts like the super trend, you'll find that in that list. Well, you'll find that in the think script list as well. I'm only going to put it there because I think that could be of interest to you guys for early momentum indications, perhaps. I mean, that's what it's designed for. Let me just pull it up though real quick. I'll share it with you. In the meantime, folks, if you're getting value out of these discussions, smash that like button. Just lets us know um, that yeah, you're getting value out of the presentation. I'll put this link in here just so you can see it, but it's right over here. In fact, by the way, I'll just show you this. While you're here, be sure to subscribe to our Trader Talks channel. 207,000 subscribers. Love to have you on board if you're not already on board. I'll put this link in the chat as well, so you have that. There you go. That's that. And then this is just the one from yesterday that would have the super trend in it as well. So there are a few of those think scripts right here that could help show you or get or provide insight as to potential shifts in momentum. Okay. Just because we might be getting there, perhaps it's good to have additional eyes on it, and ThinkScript can kind of help with that too. We're going to actually build that today, though, a ThinkScript that you guys are going to be able to utilize going forward. It's going to be great. So almost done, but so you see that right there. And so what we're going to be looking at right now, I'm going to dive right into it, is our companies that are actually taking out a prior high range over here. Okay. They're breaking above a specific channel line. And we have a really cool indicator to help us with that now that we've identified maybe some sectors to check out. Sorry, last thing, what's been moving up on uh, the last 6 months in terms of a sector rotation chart? Super quick. You can see discretionary as of late, financials since June, and yeah, technology, down a little bit. Weekly chart. Where are you weekly? Let's see right here. Okay. Discretionary actually, today is up. By and large, we've been down all week. So not too much going on there. It's been kind of a volatile week. So we haven't seen that. Let me build this. And then before we're done, we'll actually hit our markets and sector review right at the very end. But back to our regular charts here. I'm going to go right into the scan tab now. Now, folks, you want to be here under the stock hacker. And what we're going to be looking at, say, for example, we can look at any company here. Let's say, for example, we're looking at Cisco. Cisco over here, which has been up. It might be also one of these companies on the verge of just getting started here. Kind of have to wait and see because we've got earnings right around the corner here. But what if we wanted to know when any stock was breaking above, let's say, a shorter term range? Like, say, for example, this prior high or even this high. That was a fascinating break because look what happened right there. Right there. We went up and we retested. This is when we look back historically uh, on that awesome oscillator. It can sometimes give you indications of that breaking above a range and kind of holding, breakout and sort of retest. Here's some that we found. GM, breakout, retest. Now notice over here, we've got this channel here. We broke above that level. We can capture this information by using just a simple indicator and then building sort of a scan around that indicator with tools that make it so easy to do. I'm going to show it to you right here so you've got it. I'm going to go right into our edit studies here, and I'm going to throw in price channel. Now, price channel is just simply this. I'll put it on for a 20 period, and I'll show you what that looks like. 20 or a 30 period. In fact, the 30 is really quite common. Let's do this right now. You can see that line that shows up. I'm going to go ahead and just elect to take these off right now. And just so we can just keep an eye on just that price channel alone. Now there's an upper channel and a lower channel. What this will do is it will map out that prior high range. In fact, you can see it dipped because it went to the last 20 days, but you're going to get a lot of potential breakouts that might occur over a 20 to 30 day range. Now, I'm going to just go in here and I'm going to go back into it. I'm going to click on the wheel to edit this to show you what happens kind of commonly out there. Now, different variations occur all the time, but this is what I wanted to highlight here. In fact, I'm going to do actually, I'm going to take the lower band off. I'm just looking at the upper band breakouts exclusively. Let's thicken that up a little bit. We can keep it that color. That's perfect. I'll even just make it a little bit of a dot so we can kind of see it a little bit better, but there you go. Notice what we just saw here. What could the price channel show us on a move like this? Something quite interesting, actually. Okay, look at that. right there. Notice what it did? It took out this range, and this range, those prior highs. That was the 30 period breakout. Now we can tap into this really quickly here and see what's moving, let's say in technology, because why? Well, we saw the flag pattern forming on technology too, right? On the whole sector. So stocks within there could be breaking out. By the way, speaking of flag patterns, does anybody see it maybe a longer term flag pattern developing here? Just before I leave it, but we used that script to help us find this, but look at that. Big upward move. That's what you might call a weekly type flag pattern with already giving some signs of a breakout and retest. Now, do we know it's going to go high? No, nobody knows anything, but people look, traders look for expectations of strength. And remember, that's a post earnings rally too. I didn't want to leave that because that's kind of it's kind of an interesting one to keep eyes, I mean, to potentially watch, especially as it's sort of coming down very lightly, sort of actually flagging right here after the breakout. Now, I'm going to go back into the scan tab and we're going to tap into this tool. I'm going to show you how to do it. Okay, so we go into the scan tab, we go into the stock hacker. I'm going to go right over here. Oh, let me just clear this one out. And what I want to do is click on add filter. I'm going to go right down here into study. This is what you have to do to set these up. Now, click on that pencil right there off to the right. And what you're going to want to do is delete the initial study. And we're just going to use the condition wizard so easily here to find breakouts in the sectors that look, kind of interesting. Come down here. This is how we're going to set up our first condition. This is going to be price, closing price. Remember, there was an action that occurred on the closing price. This is the action area. It crossed above something. Price crosses above. It's that simple. We've just got one more to do and we're done. Crosses above a study. And the name of that study was the price channel. Now, what's nice about this is we can use anything here. We could use a moving average. We could use other things too. It's kind of easy. I'm going to focus in not on the lower band. You gotta change the plot because scans are built on plots. Okay. You can do them other ways too, but generally they're used on a plot, the coding. And let me show you how this works. What was the length we looked at? Well, the one that we saw in GM specifically was a 30. We could try other ones too, but this is going to be, instead of a 20, we're going to go 30, just like the one on GM. Now, this just says, and this is actually super helpful too, within how many bars did it break above? How many bars? I got to do this better. So we've got a length of 30 here, 30 length within today. If it's just one bar, that means the breakout happened today. Do you see how maybe giving it a little bit more time? Like what if the breakout happened 3 days ago? That could be useful because remember what happened with GM is we were just looking at GM. GM, there was a prior high over here. GM went down. We broke above, and then we went like this. So the action occurred there right on that breakout. Okay, right there. That's the breakout. That's the one day. If we just look at one day, then we can't even see breakouts that are happening past one day. So if we give it like, let's say, for example, 3 days, that means it has its breakout, but then we're giving it time to develop 2 days, 3 days, maybe 4 days, 5 days on a pullback. I think GM's more like a 4 or 5 day, actually. I'm going to do this just to show you as an example, though. Let's just go 4. Okay, we'll split the difference. We'll say 4 days here, within 4 days. So does everybody see what's going on here? We broke above. We're in a sector that we spotted initially. We saw the market using sectors and markets and sectors. We saw the market starting to move and with the potential of breaking out. Then we went into sectors and said, what are the strongest sectors? Maybe one that's showing a flag. Well, that's technology. And now what we're doing is we're saying, well, what companies within technology might have already broken out or could be breaking out over a 30-day range. Now we can change this number if we want to do a 20, shorten the cycles. There could be shorter cycles as opposed to a longer term move, a shorter term move. But I'm going to show you what we can get here. And we're going to actually do this. Watch this. Click OK. Instead of just doing technology stocks within the S&P 500, we're going to expand this out. Now click OK here. But this is a very, very important point. What are we going to scan in? The NASDAQ 100. Just going to use a larger basket of tech stocks. We know tech stocks just by looking at the Mag 7 can really move the S&P. So it's going to give us information about the sector chart, the NASDAQ, and also where really the bulk of the weightedness is on these indices. What's really going to move the indices? Technology. It's given us a lot of information here on a breakout over 4 days. Boom, I'm going to click on it right there. 21 stocks, so about 21% of the companies in the NASDAQ 100 have broken out over their 30-day range over here. Okay, now do this with me since you guys have followed along. Come over here and click on this. This is a very straightforward one, but click on that middle hamburger icon right there. Go over here and just say save scan query, price channel range. And I'm going to say price channel breakout, which is one I don't actually have, which is a really interesting one. I mean, I've got different ones like on my own stuff, but this is one I wanted to get across so you guys have this. And once I have it here, price channel breakout, sure, it's here. But the beauty is I can go over here. I click scan, it's still not coming up, but that's okay. Maybe it's feeding it in over here. So now that I've saved it, I'm going to go over here. There it is, same one. I'm going to go to my watch list default. Let's go into price channel breakout. There it is. We've got it now. And isn't that a beautiful thing to see? Now we've got this information for that scan up top over here. Why is that interesting? Because we can click right there and we can link it to our charts. So we can see these very, very quickly. So let's just do exactly that right now. Okay. I'm going to keep this 30 on so we can confirm that it's happened. Now, I'm going to start off. Oh, you just go through the list and we can take a look at these, but this is, okay. So is this the tech group? No. There is one tech that I'm seeing here, but remember we did the entire NASDAQ 100. I just wanted to give you a bigger base. I'm giving you this now because what can happen is if technology starts to move, this could start to light up, and that will be one of the signs you could look at too. Awesome Oscillator would definitely work. I have that saved over here. You guys can go in and take a look at that too. It does have some interesting ones, but that one I think is on the S&P 100 I saved it on. You could do it on the NASDAQ too when it starts to show some signs. But here we go. Let's go over here. Let's just take a look at this. So there's Microsoft. Okay. Did it hit above a 30-day range? Do you see where the 30-day range was right there? It was just the prior high right there. We clearly got above. If I put a price channel of a 50 in here, probably it would have given us maybe the 50. Ooh, we're getting close to it. But there you go. You kind of see the price behind the scenes there. It's a little bit tricky to see, but there you have it. In other words, you don't need to keep this on if you don't want to anymore. But it did have a breakout above a range recently, and if it has a breakout here, it could be interesting. EA, which by the way, I think might be getting added to the S&P 500. Did you guys hear that? It's kind of interesting. Did it break above its range? It did. Some of these are gonna look very different and unusual. But there is Amazon. Yeah, that's the big gap right there. Where did we get our signal on the breakout? We got it right there. It broke above that line. That was our 30-day prior high in the past 30 days. That was the highest point over the past 30 days, and it hit it. Okay. we can see what else has been moving. Oh, I got to take that off. There we go. PayPal's in here too. PayPal just recently broke right there. Now, I'm going to take this guy off right here. I'm just going to do this. I'm going to just take that show study off, click OK, and so you can see it. Okay, there is PayPal right there. This was brought to my attention too. There is a little bit of a island bottom in here. Why do they call it the island bottom? You guys can see the island right there, right? This is the island down here. That's the break. In other words, there's a separation between price on top on both sides and the island down below. Also known as a longer term bullish bottom formation. Doesn't have, nothing has to be perfect, but there you go. It's one of the rare ones. You don't see this all the time. Flag, flag again. This is spotting some interesting price pattern setups here to keep an eye on. Could this go up? I know there was a couple of reports on this saying that it was undervalued and other things too, and higher expectations, but there you go. Remember we saw that move in healthcare? We're seeing some of that here. REGN, the breakout's going to be right over here. Healthcare's moving. Some of it is. Haven't seen, PCAR. Okay. Interesting right there. Prior high, boom. Looks a lot like GM, sort of, right? In terms of a longer term breakout, and it's spotting something right there. Possibly, you see? Where, in other words, and we talk a lot about this in the swing trade class, but this right here, this, folks, could be a longer term, move unfolding in terms of a longer term sort of a flag pattern weekly on that range. And it might continue a move like this is what traders would look for, showing strength. But that's one way to do it. Now, remember, on that scan, if we wanted to see something different over here, we have to come over here if we want to look at the entire S&P 500, or if we just want to look at technology stocks over here and just have it showing up every day, if something qualifies, look at that, information technology. Okay. Let me show you this. I'm going to do this. So it's going to be the S&P 500. We'll finish on this so we can get to the chart specifically, and we're going to scan in. So in an industry in the S&P. So scan in, intersect with that chart that we were looking at, which is information technology. I'm going to look at everything across the board. There you go. Now we can look at a 30 or a 20. I'm going to actually even change this to a shorter term cycle of the 20, but both could be very, very interesting. You'll notice that you were getting the 30 popping up quite a bit with the 20. It's like it was the highest range over the last 30 bars. In this case, over the last 20, a little bit shorter time. But normally that's like a month to a month and a half, 20 to 30 days, calendar days, month and a half. Might be the lowest I'd go right there. But if we click on this, what are we getting? Now, these are all tech stocks, and they're all in information technology, and they're unfolding right there. Okay, so we had that. Wanted to show you guys this, but you remember, if you want this to show up over here, you got to come in and re-save it like that. And now this will change. It'll update here in just a minute because why? We're just looking at S&P information. It just did. See it? You see what I'm saying? You got to do that first. Okay. Last thing. Okay. Last thing. Markets and sector review. A couple of quick notes I wanted to take a look at here as we are going into the markets. Now, how are we doing in terms of our Hindenburg Omen? Well, we got another list of 52-week new lows over here. The difference here, and we can get this, we've seen this before, even on moves coming out, it's not trending down, but it's something to keep an eye on. If we do break down lower, this is an omen to a bit of a bear market, okay, that can unfold here. Lastly, I'll just state this, folks, as you're seeing over here, look at this. Higher highs still. We did not break below this range on our advanced decline line market breadth indications. Remember here too, on our McClellan oscillator, there's about a 2 to 3 week time frame once you get back up above the -70. right there. So approximately here, there could still be 2 to 3 weeks, which would put us in the summer rally range if we do begin to go. But the McClellan oscillator may be working in our favor right now. All right, everybody, that was a ton of information, but I wanted to make sure. Oh, I'll share it. Yes, let me share that so you guys have it again. Think scripts aren't guaranteed for timeliness or accuracy, but I wanted you to build it too so you knew how to do it. But at least here it is. So here's the scan itself. I will have that saved for those of you viewing this on the recording down below as well in the description section under more. All right, everybody. Thank you, Cam, for your help in the chat. Everybody, have a fantastic rest of the day and an excellent weekend. I'm going to go right out and do some mountain biking right after this class, pretty much. So have a good one. See y'all next time.